Everyone, and welcome back to Forex Scope, your go-to for in-depth Forex analysis, aiming to give you that edge in the markets. Today, we're diving deep into the EURGBP pair, and we'll be breaking it down on both the 15-minute and the 1-minute charts. Get ready for some actionable insights and potential trading opportunities. If you're serious about improving your Forex trading and staying ahead of the curve, make sure you hit that subscribe button and turn on notifications so you don't miss any of our upcoming analyses. Let's get straight into the charts and see what EURGBP has in store for us. The resistance zone is identified between the timestamps 176-230-3500 and 176-230-4400, with the resistance level situated above 0.88147. This area is characterized by significant price action where the market attempted to break higher but was met with strong selling pressure, pushing the price back down. Specifically, the candle closing at 0.88202 after opening at 0.88224 shows a rejection from higher levels. Prior to this, the candle from 176-230-3500 opened 0.88224, closed 0.88202, and the candle from 176-230-4400 opened 0.88202, closed 0.88212, both show a struggle to sustain prices above this critical level. The upper wick of the candle at 176-230-3500 extending to 0.88232 indicates a clear ceiling. This zone acts as a psychological barrier where sellers are more active, preventing further upward momentum. The repeated rejections from this price range suggest a strong conviction from the market to hold this level as resistance, making it a significant area to monitor for potential reversals or consolidations. The confluence of multiple candlesticks struggling to push past this price point highlights its importance as a supply zone. The support zone is identified between the timestamps 176-233-2300 and 176-233-3200, with the support level situated below 0.88125. This region exhibits strong buying interest that has historically prevented further price declines. Observing the price action, the candle that closed at 0.88051 after opening at 0.88061 shows a brief dip. However, immediately following this, the candle from 176-233-3200 opened 0.88051, closed 0.88088, demonstrates a recovery, pushing prices back up from a low of 0.88035. The previous candle, ending at 176-233-2300, with a low of 0.88043, also suggests that buyers stepped in to defend this price level. This area represents demand where buyers are more aggressive, absorbing selling pressure and initiating upward movements. The presence of these buying pressures is crucial for maintaining the integrity of the support. The repeated tests of this price range without a decisive breakdown indicate its significance as a demand zone. The multiple candlesticks interacting around this price level highlight its effectiveness in providing a floor for the EURGBP pair. The support zone is identified between the prices of 0.88091 and 0.88104, observed between the timestamps 176-234-6100 and 176-234-6280. This area showcases a clear consolidation pattern where the price repeatedly tested the lower boundary before showing signs of upward movement. Specifically, within this timeframe, the price oscillated between a high of 0.88112 and a low of 0.88098, indicating a period of indecision but with a floor being established around the 0.88091 to 0.88104 range. The multiple interactions within this zone, including several instances where the price dipped slightly below 0.88100 but quickly recovered, suggest significant buying interest at these levels. The presence of both smaller indecision candles and a few with larger lower wicks reinforces the notion of this being a strong level where buyers stepped in to prevent further declines. This price action indicates a battle between buyers and sellers, with buyers showing consistent dominance at these particular price points, forming a reliable support. The horizontal trading activity further solidifies this as a key area of interest. 0.88133-0.88141. The resistance zone is identified between the prices of 0.88133 and 0.88141, observed between the timestamps 176-235-3180 and 176-235-3360. This region clearly delineates a price ceiling where selling pressure has historically been strong, preventing the EURGBP from moving higher. Within this identified timeframe, the price action shows a significant struggle to break above the 0.88141 level, with the highest price reaching 0.88146 and immediately retreating. Conversely, the price found some difficulty pushing below 0.88133, as indicated by the low price of 0.88130 in this period. The presence of multiple candles with long upper wicks, especially the one around 1436, timestamp 176-235-3420, highlights the rejection of higher prices. This suggests that sellers are actively defending this price range, creating a significant barrier to upward movement. The repeated attempts to push higher, only to be met with strong selling pressure, solidify this as a robust resistance area. The price congestion and subsequent downward moves from these levels emphasize its significance. The EURGBP is currently navigating a complex price landscape, exhibiting a characteristic zigzag pattern that suggests a potential tug-of-war between bullish and bearish forces. The Fibonacci retracement levels, with the lower boundary at 0.88091 and the upper at 0.88141, indicate that price 0.88126, is comfortably within the established trading range, suggesting an immediate pivot. The proximity to the 0.88141 Fibonacci resistance hints at a potential short-term pullback, leading to price 0.88141, as a target before a possible reversal. However, the underlying tick volume and the observed price action around the 1-minute support zone, 0.88091 to 0.88104, suggest that any dip will likely be met with buying interest, paving the way for price 0.88115, to test the lower bounds of the recent consolidation. The historical resistance at 0.88147 and the upper Bollinger Band at 0.88188 further reinforce the idea of limited upside in the immediate future. Conversely, the prior breakout above 0.88075 and the subsequent consolidation indicate underlying bullish sentiment. The market's ability to bounce off the 0.88091 to 0.88104 support zone hints at a potential upward continuation, making price 0.88139, a realistic target as buyers regain control. The price might then retest higher resistance levels before a more significant move. The consistent interaction with the Bollinger Bands suggests that volatility is present, and traders should anticipate fluctuations. The overall sentiment, considering the recent upward trend and the strong support, leans towards a bullish outlook in the medium term, but the immediate path will likely involve testing both resistance and support levels as the market finds its footing. This zigzag prediction aims to capture the short-term fluctuations within the broader consolidation, offering entry and exit points for a dynamic trading strategy.